going on, guys? Welcome into today's episode. We've got Mr. Blaine McLaughlin of McTooth Capital. You heard that right. He went from drilling to real estate deals. I always love hearing, high income earners, doctors, dentists, physicians, lawyers, you name it, that, learn that they got to find a way to, transition out of trading time for money into building wealth and passive income. And it's funny how many of them find real estate and land in real estate as that vehicle for doing so. And we get to hear about Blaine's journey, really starting and still working within his dentist practice, but starting off as an LP and investing in other people's multifamily deals and what his experience has been like. This is great for anybody that is looking to raise money from other limited partners that have capital that want to invest in your deals, or maybe you are somebody that doesn't have the time and you just want to find a good sponsor and invest in other people's deals for passive income. I always love hearing the different journeys and experiences that LPs have when dealing with different GPs and sponsors who have the deals that they're pulling funds for. There's a lot of stuff that Blaine shared today regarding do's and don'ts and, kind of some horror stories, some wins, and some different ways that he has, transitioned into being a limited partner investor and is looking to transition into being a general partner. So always fun seeing and hearing different people's journeys into real estate investing and, the war stories, obviously the things that you can avoid by learning from other people's mistakes, as well as some of the things that they're doing well and what's working for them. You're going to get a lot of that in today's episode. So let's dive in with Mr. McTooth Capital himself, Blaine McLaughlin. Welcome to the show, Blaine McLaughlin. How we doing, brother?
Hey, I'm doing great. And you?
I'm good. I actually last week I went to the dentist and got my teeth nice and polished up, and
they look shiny. They look shiny,
and it made me think of you, brother. Knowing that you are somebody that has obviously built a career and a business as a dentist, and I know we'll kind of hear a little bit about your journey. But you've also, used that career to somewhat be kind of a vehicle and a stepping stone for you to build wealth outside of your business in real estate. So excited to hear more about that transition and that mindset, that focus. Some of the hurdles and challenges that I know everybody experience breaking into real estate. Take us back to why dentistry and what got you into that space.
Well, as I was growing up, I was always a science fan in school, and I had it was always my favorite subject, and so I kind of wanted to get into some sort of science stuff, right? I mean, and I got closer to college, medical field. My dad was a dentist, probably had something to do with my career. He never once mentioned anything, never pushed me or anything towards dentistry. But the great thing is that I really liked his lifestyle. I mean, he there's a couple afternoons he'd take off and never worked, Friday afternoons, and didn't work a lot of Fridays, and we had a pool in our backyard. I mean, it was cool. And so I always thought about getting into medicine. And I started looking at some of the physician stuff and ER docs and radiologists and things like that. And they're working a lot of hours. I mean, these guys, and they're working some terrible hours. And I'm like, I don't think so. I think I'll stick with dentistry. It gives me a chance to be my own boss too. And obviously there's a lot of good and bad things about being your own boss, but it gives me the freedom to kind of do more of what I want to do and how I want to do it. And so once I got into college, I went to the pre-dental classes or meetings and stuff like that, and decided, hey, this is where I'm going.
So you got out of college, decided to go all in on kind of, being a dentist. Were you thinking as a business owner at that time of like, hey, I want to own my own practice, I want to buy into a practice, or was it more so of like, put somebody in a chair and let me start cleaning teeth?
No, I was totally thinking a business owner. And that's what kind of one of those things my dad mentioned to me. And I tell everybody that talks to me about dentistry, they're like, hey, well, dental schools does a great job of teaching you how to take care of people and fix their teeth. And they don't do anything about how to run a business.
Right.
And so I knew that was coming. And so, once I started practicing right away, I was an associate, a worker for another dentist at the time. And I told her, I said, "Hey, can you teach me the ways of how to run this business?" Because she'd been running, the dental office for 10 or 15 years. And so, we got along really well. And she's like, "Yeah." And after a couple of years, she goes, "Yeah, you need to take this over for me because I want you in here full time and, to be here for the long haul." And I was like, "Great." And so, I did whatever I could, to learn. I'd stay late or, come in on other days just to learn about what it takes to run a business. Cause again, they don't teach you anything about it. And a majority of the dentists are business owners.
Mhm.
And so, I mean, you got to learn it. And yeah, so I'm always telling everybody when they're in college, I'm like, "Hey, take some business classes, do some bookkeeping, some accounting, some marketing." I learned that all on the fly and with a lot of trial and error.
Yeah, as do most business owners, right? I mean, I think
Yeah.
there's a beauty in that kind of like that blissful ignorance, right? Because if you really knew all the heartache, the sleepless nights, the financial screws getting tightened on you at certain seasons of the business cycle,
Yeah.
right? You might not actually go down that path, but
That's the thing about dentistry. To interrupt you a little bit, but the fixing the teeth thing is oftentimes very easy for after you're out a year or two, right?
right,
Because it's there you see a lot of it, but the business part is what and dealing with employees. I mean, we have to like hire and fire them and guide them and teach them and mold them, and that's again that's a challenge that you didn't think of much. Most people don't think of that when they go into the field.
100%. Now, I'm always interested in deal making and business buy-ins or buy-outs. How'd you structure your deal with that gal that you obviously had a great relationship with? She wanted you to kind of take over the practice, the book, but she obviously wasn't going to give it away, right? So, how did
No.
you kind of structure that deal with her to create a win-win for you guys on the business front?
Well, it was rather interesting because I didn't know anything about it, and I'm like, where am I going to get the money to buy this thing?
Right.
And we talked to some bankers, and they're like, the practice you're buying in is very stable. We've been dealing with her for years, and we know where this practice is going. So it was a local bank, so that made things really really easy
Perfect.
because they knew what they were getting into, and they said, "We'll help you." And I'm like, "Okay." And so we put together the deal, and we had a kind of like a dental broker. I mean, these
Yep.
people that they do this. I mean, and so we're like, she never sold one, so she didn't know half of what she was doing either. And so we got this kind of middleman dental broker to say, "Hey, this is how these are usually structured. Do this, this, and this, and this." And I'm like, "Okay, that sounds good, and we'll do this long of a buyout or whatever. And after so many years, you'll be half owner." And then like 6 months later, she said, "Hey, by the way, I'm retiring. I'm moving out of here. You got to take the rest of the practice." I'm like, what?
So she wanted you to buy out her remaining shares and just
Ba-
completely cash her out. She wants sunset.
Basically,
Yeah.
that was it. Yeah, she goes, I'm out of here. You have to buy the rest of this." And we had another dentist working for us at the time, and he wasn't the owner mentality. He didn't have the owner. He wasn't the owner type. So it wasn't like he could buy her half,
Mhm.
And so, but anyway, so yeah, that was kind of hectic, and that was really thrown at me fast. I mean, she told me that, and within a month, she was gone. And so that's what made it interesting. And I kind of decided it was sort of uncomfortable. I mean, it threw me, for a loop for a little while, and I didn't want to do that. So I now have a partner with me as well, and I tried to make the transition a little smoother, a little more straightforward. And I told her I wasn't going to bail on her and be gone in a month. So
Yeah,
uh,
that probably made her feel a little more comfortable knowing that versus the position you were in going, all
oh
right,
man,
this was a
yeah,
key part of my growth plan
yeah,
for
right, right,
continue to generate revenue on this business. Those are the things right on the fly that force you to kind of get creative and
yes.
plug holes in the boat, and that's cool that you were able to figure that out. So when did real estate investing start coming into play and on your radar? It's funny, right? I love you got McTooth Capital, which is awesome, from
Yep.
drilling to deals. Like what a great tagline there. Um, I know so many doctors and dentists and people in medicine and people who have high earning income W-2 kind of quote unquote day jobs that all seem to over time go, man, real estate is my vehicle that I want to, kind of trade my active income and time from and transition over into more, passive opportunities depending on what kind of real estate vehicle and model you decide to go after. So when did that kind of get on your radar? Who was it that, kind of planted that seed and bug for you? And then how did you pursue that path, working a full-time job as a dentist?
Yeah, and it's again kind of an interesting story because I started right out of dental school. I don't have no idea what got me interested in real estate, but for some reason I got onto the Kiyosaki books, which almost everybody
Yep.
in real estate has read, and they just hit me, and I was like, oh my god, I need to get into the right quadrant here, and so I started reading some stuff, and luckily, my next door neighbor, he lives 2 houses down, was a commercial real estate broker, you know, and agent and stuff, and that's what he did, and I'm like, "Hey, bro, can you help me with this?" He goes, "Oh yeah, I'd love to." And I started thinking about, appreciation and having your loan paid off by somebody else, and and some tax benefits and stuff like that, cash flow. And I'm like, this might be good. If I buy, say, a 4 or 6 plex, something like that now, and then hold it for 20 years, it'll be paid off. By that time, my kids will be going to college. We're just starting to have a family at that time. And so, then I can sell it and there's college money. So that was my initial thought process.
Yeah.
And I'm like, oh, this is great. And so we got into a couple deals, and they were more what we call JV deals, joint venture, where 4 or 5 guys would go in and buy a 20 plex or whatever. We'd all put some cash in, and then this guy would run it. And it just didn't have a lot of a plan moving forward in these. So it was like, hey, this is cash flow on 8%. And we're like, oh, that sounds good. Let's do it. So we buy it. And then it's like, oh, yeah, well, the water heater went out. And so, that's going to take up our cash flow for this month. We have to fix that. And then a tenant would move out and they had to fix, put new carpet in and remodel or something. And so, it was like, it just never fully developed the way I wanted it to. And so I was just like, okay, I just focus on dentistry because I'm a dentist and that's what I do, right?
Yeah.
And so I got involved in a couple of the deals just because they sounded good. We actually had a commercial deal that it had 5 tenants in it. One of them owned about or leased about half the property, and then they decided to leave. And then there goes your cash flow on that property. We couldn't get anybody in there. It went into about the time the loan was up due. The bank's like, we can't refinance it. You're not cash flowing. So they foreclosed on it. And so again, that was another, I'll just stick with dentistry maybe. And so, I messed around with that for 20 some years.
Yep.
And had some deals like that. It just wasn't that great. And then I started, my kids they're all in college now. A couple years ago, I started looking at my retirement going, hey, what's retirement look like for me? I'm kind of getting up there. I want to do a lot of things, see a lot of the world. And I realized I didn't have near as much in my 401k as I'm going to need. And I'm like, what is this? What's the deal here? So I did some calculations. I've been getting a solid 3% return over the last 25 years of my 401k.
That's exciting.
And I realized that, yeah, isn't that great? And I'm like, I'm freaking done. No more. I'm doing something else. And I'm like, I've always been attracted to real estate. I just need to learn it. I just need to learn more about it. And maybe it's not apartments. Maybe it's commercial buildings. Maybe it's something else,
Yep.
or retail or whatever. And so I started to dive deeper into it. This is about 4 years ago. Really learning more. And I went to some conferences and multi-day conferences and was like, and it clicked. And I'm like, I know why all those deals didn't work, because they didn't have this planned out and they weren't expecting this. And there was no contingency and, no exit plan. And, and it just, and so I'm like, yeah. And as you said, a lot of high income people get into real estate because right now I'm trading time for money.
Yeah.
Right. And that takes its toll. And so I want to have my money work for me. And I think real estate is one of the best ways to do that.
Being that you were one of these people and you've worked with some of these people, what would you say some of those, mistakes that new investors make coming in that are easily avoidable when you kind of spotlight them right from your own perspective? And I can't tell you how many people I've talked to that, I give you props for, coming back to the table, right?
Right.
Like I know so many people that they have a bad first or second experience with real estate and they're like, to your point, man, I'm just a dentist. Let me go back to being a dentist. Or I'm just a farm tech. I'm just going to go back to being a farm tech, when that's when you got to come back to the table and, leverage the learning lessons into capturing the ROI that you may have lost in that first opportunity, right? Like,
Yeah.
you got to
Yeah.
use those stepping stones and those failing forward moments as an opportunity to cash in on it, knowing that you're not going to make those mistakes anymore. So what were some of those early mistakes for you, that you kind of highlighted on a little bit, but that you see, other new investors make when they're coming into the space that are avoidable?
Well, I just, the biggest issue I had is when I read the Kiyosaki books, and that's really all my knowledge. When I got into it, I was like, hey, I need to do something, right? At least I knew that.
Yeah.
But I'll leave it to this guy. He's the expert, and I really didn't educate myself at all at that point in time.
Mm.
And again, I after going through educating yourself is and investing in yourself is the best investment you can ever do. Okay, it always returns, and so that's when I started to get back into it. I said, I'm going to invest in myself in this area. I'm going to learn about this stuff deep. Not that I'm going to have to do everything, in a whole real estate syndication or multifamily syndication, but I at least need to know what's going on. And so I got into it totally kind of blind, right? I just knew I needed to do something. And like I said, that the guy's a great guy. I still see him today and know him. And and he does a ton of real estate stuff. And I just wasn't educated at the time. And the other thing I always tell people is you got to know, like, and trust who you're investing with.
Mhm.
And again, this guy was my neighbor, and I knew him very well, and he was super likable, and I trusted him. And so I don't have any regrets actually doing that because it really taught me a lot. Um, but like I said, as I mentioned before, there was no contingencies for if something went wrong.
Yeah.
There was no plan that I saw. There was no exit strategy either. I mean, I think these were all, I think they were hold and just buy and hold and cash flow if you can over the years. And so, I didn't, and that's something your investor needs to know. Is that something they're in for? Do they want cash flow? Is that what they're looking for? Or do they want to fix and flip and build wealth at different levels? So there's different reasons to get into real estate in investing, and you got to know which one to switch, so you know
So
which direction to go.
how did you land on your model? When you were going through and looking at all the different, vehicles under the umbrella of real estate investing, how did you decide on what your investment model and kind of thesis was going to be going forward that you decided to pursue?
Well, I had a buddy of mine I went to dental school with, and his kid's the same age, and he was going through the same situation. So I called him up, and I'm like, "Hey, man, how you doing? What's going on? I just did this with my 401k. I've been getting 3%." He goes, "Man, my return's terrible too." And I'm like, "Yeah." He said, "I got to do something else other than this." And he's like, "You know what? My buddy is going to a conference in Dallas here in 3 or 4 months, and it's a real estate conference. Do you want to come?" And I'm like, "Yeah, I'm in. I mean, here's an opportunity that's presented to me.
Yeah.
I'm not going to run away from that because that's what I've been looking for." And so I said, "Yes, I'm there." And it happened to focus on multifamily. And so I went to that. It was very in depth, taught me all the things that I again realized why the other investments didn't work in my early years.
Yep.
And so that's kind of how I got into multifamily. It's like I went to this whole conference, and that's what they focused on. And I'm like, I see a lot of positives here.
I
So
love that. Love that. Now, talk to me about your first big multifamily deal. What did that look like, and how'd you get into the space, and how did it turn out?
yeah, well, the one of the things that you also should that I would recommend to people is you got to be around people that are doing what you want to do. I mean, anybody can. Real estate investing is not a new thing, right? I mean, it's been around for years,
Yep.
and there's people that are doing very well with it. And so you don't need to reinvent the wheel, right? You just got to learn from these people that are doing it. And so I find a mentor. So I found this mentor, um, and again, been to many, many courses and classes and around a bunch of people that go there too. And so you surround yourself with the people that are doing what you want to do. And I'm in uh, five, five deals, I think, now as an LP. There's different LP and GP. Um, Maybe we'll go into that later, but maybe that's a different podcast. But I'm basically a passive investor at this point in time because I have a full time practice still in dentistry, and so I don't have a ton of time to go run one of these properties and turn it over and do what I want to do. So I got involved with people. I I learned about them. I hung out with them. I went out, had a beer with them. You can go have a beer with somebody or something. It
Tells you a
kind of
lot about
brings out
person, right?
the real person, right? Yeah.
Yeah, totally.
And and so we did that. I found some people I knew, like, and trusted, and just and started going, hey, this looks like a good deal to me. This is in a great area. This market's awesome. And so I kind of spread out diversified my portfolio at this point in time in some different areas of the parts of the country.
So you're
And
doing all LP investments then. So you're not running the GP or finding the deals and, doing all of that on the GP side. You're essentially identifying good sponsors and GPs that you think have good deals, good plans, good execution, good track records, and you're placing passive bets with those individuals to kind of go out and do all the heavy lifting, generate the yield, make the exit, rinse and repeat.
that is what I'm doing right now.
I
Now,
love
that
it.
doesn't mean I'm not looking for a GP job deal. And I've looked I'm from Iowa, and I've looked in the state of Iowa isn't my favorite place to invest. It's the market's pretty slow growth,
Pretty flat.
although Des Moines is doing pretty well. And I've looked at some deals in Des Moines. I just, by the time I got to the point, like I said, it was 4-ish years ago, 3 or 4 years ago, I really started getting into this. Uh, by the time I got to the point where I'm like, hey, I think I'm ready to move towards a GP type of situation. That was about in 2023 when everything went crazy, right? The interest rates went sky high. The insurance is going nuts. The taxes are going crazy, and all these deals are coming to a halt, right? And so, I mean, the deal flow over the last couple of years has been very, very low.
Yeah.
And so there aren't a lot of them out there. And so I kind of get to this point where I'm like, okay, I'm going to start looking for deals and see what I can do to help, find in these areas. And they all kind of shut down. And so, I've been trying to look for some deals. I do kind of like the numbers part of it. I'll underwrite them all. I got a big old, Excel document that I can put all my numbers in, and it'll tell me how well it's going to cash flow and what the kind of returns are and stuff like that. So I'm working towards that. I just haven't got there yet. Again,
Well,
it's kind of difficult time wise with
yeah.
being a full time dentist. So
Yeah, that and just on top of it, right? Like you said, the economics, macroeconomics of the marketplace, the cost of debt,
mhm,
where sellers are at. It's a very interesting time, specifically too, in your asset class of multifamily. It's tough to find deals with real yield that make sense and, financially pencil to at a level that make it worthwhile to go and take the risk, right? I mean, when you
yeah,
can
yeah,
get, when you got to get debt at 7% and it has all this, hard work and heavy lifting and, risk attached to it, or you can go put your money, in a money market account and, clip 5% with practically no risk. It's
yeah.
those are things that make it challenging. But at the same time, those deals are out there, right? I mean, there's
They're
always
starting to come.
I always
Yeah,
tell
yeah,
people it's, in good markets and in bad markets, I've always found great deals. It just sometimes
yeah,
requires you to look at 10 times as many deals and send 10 times as many LOIs out.
yeah.
Sometimes the frequency is much lower, right? So, but but it is one of those things where it's the consistency of consistently looking for deals and opportunities, or, having conversations, or what can get you in front of something that actually goes, hey, this is the outlier I've been looking for, right? That's that needle in the haystack. So I'm curious from your perspective, being that you've, worked with different sponsors. Um, have you had all good and positive experiences with your sponsors?
Of course not.
Of course not. All right. That's what I'm hoping to hear about now. Because I think it's important, right? I mean, everybody thinks like, oh yeah, this person brought me a deal and, it's going to do a 28% IRR and a, 13% cash on cash. Like everything's going to be perfect. I'm just going to, wire over my 100 or 250,000 bucks and I'm going to be collecting my checks and, life's going to be great. Right. Is that always the case?
No, it sure isn't. And that's one of the things you got to realize anytime you get involved in real estate, things go wrong. And there's always going to be something that goes wrong.
Always.
Always. And so that's the risk involved. And, over the last couple of years, it wasn't just one or two things. It was like 8 things that went really wrong. And that's why a lot of these deals are in limbo or, are struggling a little bit, but something always goes wrong. So, yeah, you gotta you gotta learn about what those things are and how to mitigate those. And by being part of these LP deals, I've learned so much about what are the GPs doing in these to switch and pivot and take a different direction. How are they working on occupancy? How are they working on pushing rents up if the rental market is down, and that kind of stuff. So I've learned a ton about that from these other people, which is great. The biggest thing that I get frustrated with is communication. Some of them are so good, and every month I get a little sheet or email that lists everything. This is where we're doing. This is what's going on, and it's great. And you email them back, and they're like, "Hey, oh yeah, I got this, and we're doing this because of that. I'm glad you asked that." And then some people are. It's like, "Hello,
yeah, it's
anybody out there? Hello?
Anybody home? Yeah,
Yeah." And you don't get any response. And again, that's the deal might be okay, but I want to know what's going on. Again, I'm trying to learn. I'm trying to be a GP, and these other people that aren't responding or don't send out much information. It's like, well, you know, you, did I know you very well? Probably not that well. I
hmm
mean, everybody else said, oh, these are good people, so I got some secondhand information.
yeah,
But that probably wasn't enough. So that's kind of a lesson learned. And will I invest with them again? Highly unlikely.
yeah,
So when I become a GP, I'm going to make sure all my investors are in the loop and man to answer their questions and take care of them, just like I've been doing for 30 years in the dental field, right? I mean, you take care of
totally.
patients. Somebody asks you a question, you answer it. If they
Yeah,
call you, you call them back. They
yep.
email you, you email them back right away and let them know. And that's the kind of the culture I brought to our office. And that's what I would do as a GP as well.
Yeah, you play to those strengths, right? Making sure
Yeah.
that you know what you bring to the table, you know where your weaknesses are at. You build a team of people who have strengths and your weaknesses, and you find a way to win together. That's something
Yep.
that I've seen and heard so many horror stories over the years of investing. In terms of LP's biggest complaints, right? Is for anybody listening, if you're going to pool other investors' funds, their hard-earned money that they are entrusting to you, at a bare minimum, the least thing you can do is respond and communicate in a high frequency, timely manner, right? I mean, that is and one of the biggest thing I've been involved in a lot of different deals, and I've been in good deals, and I've, thankfully most of them have been great. I've been in a few really bad ones though too. And what I have respected about the ones that were GPs where their deal was struggling or going sideways, the ones who communicated the entire time, good, bad, or indifferent news, they were
Exactly.
consistently keeping you in the loop. They were showing you how they were trying to weather the storm, because sometimes you can have what seemed like a good deal go bad for a lot of reasons that were outside of the operator or the sponsor's, um, responsibilities, right? But then there are other times where you've got, people that are not operating and managing the way they should be. They're not communicating the way they should be. And as you said to that point, don't ever expect an LP to want to come back into a deal with you ever again. And if you're somebody that, is like me or like you who plans on doing this for a really long time going forward, you care about the long-term value of those relationships. So the most important thing is to do right by your capital. I've done a lot of deals and, raised tens of millions of dollars for different projects that I've done. And I've never, had an investor that I raised money from, lose money on a deal that I was the GP on, because those are things that
Nice.
you care about, right? Is making sure that you want to make those investors whole and take care of them for the long term. So I love that you kind of brought that up and shared a little bit about your experience, being that so many people, they look at a PDF and a pro forma, and they look at a little basic plan, and they're like, where do I sign up? Like this sounds amazing. But there are so many different things that go into these deals when you're syndicating that you really just got to be careful about. So I appreciate you sharing that. Talk to me about McTooth Capital. What's the plan there, and what's the focus, going forward? Are you just going to continue to raise capital and go into LP positions and allocate accordingly there? Or are you looking to, take McTooth Capital to be more on the GP side?
That's the GP side, and so I formed the company, and if obviously I'm a dentist, so everybody thought it was cute, and I'm like, okay, but no, that's definitely towards the GP, and I'm looking to raise capital, because that's one way of getting into being a GP, is to bring money to the table. I mean, that's a lot of deals have good people that find them and know what to do. It's getting the money there to make it go. For the down payment, that's important. In kind of the last step, the first step, the last step, or however you want to talk about it, but you got to get the money there, and so that's kind of what I'm doing with McTooth Capital. I have a podcast of my own that I like to. Me and my buddy that got me into this, we have a podcast together, just educating people on real estate. I have, I'm on stuff like this just to try and share my knowledge so I can help other people, contacting other dentists and doctors who are in the same position, because I know burnout is huge for the medical profession.
Yeah.
Again, I've been blessed enough in dentistry. I'm create my own life, and they all give me a hard time, because you're like, hey, I'll work on Fridays. And I'm like, yeah, that's because I planned it that way.
Yeah.
But, it's still, there's, it's difficult. And so I want to help those people prevent the mistakes. And I'm like, hey, have you looked at your retirement plan? The dentist who is my partner now, she just had her first baby. She's a youngin', a kid. And I keep talking to her about this. I'm like, she goes, I got student loans to pay off. I said, I know. Just learn about this, moving forward. And I just trying to help other people prevent the errors that I went through, to make their transition and their retirement and stuff a lot smoother. So
I love it. Well, if people want to know more about you, what you got going on at McTooth Capital, or some of the podcast and the other content that you're putting out, where's the best place for them to connect with you?
Well, one of the best places is because of that retirement, the 3% deal. I put together a little page called caniretirecalculator.com. And so if you go to caniretirecalculator.com, it's got a little calculator. You can put in your numbers and where you're going and how much you're going to make, and to get an idea of where you sit, whether you're young or hitting retirement age like me, or thinking about retirement like me. And so that's a great place. And once you go on there, you can get a hold of me, and I got newsletters and stuff I send out to people connecting there. So,
well, we'll be sure to link all of that up on Blaine's episode at millionairemindcast.com. Blaine, thank you so much for joining the show today, brother.
Hey, it was great. It was fun. Nice talking to you, and take care. Appreciate it.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionaireMindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow, you want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.